G'day ladies and gentlemen, welcome back to another Bitcoin video. We have seen over $124 million of longs liquidated in the last 24 hours as Bitcoin pushes up to that 25.2k strong resistance level. It's been rejected sharply and we've come all the way back down, as you can see on the daily chart here, to that 23k region. Before we look into why that rejection happened and what's going to happen next, we need to quickly look into an exclusive offer by the Bitget Exchange. Now, just for this month, just for February, the Bitget Exchange is offering a 20 USDT reward to anyone who signs up using my referral link and makes their first trade. So if you're interested in getting 20 USDT for free, basically, just make one trade on the exchange using my referral link, this is your time to do it. You've got until the end of February, sign up using my referral link, and you get a 15% discount on fees as well. It's a great exchange, and everyone should be using it in my personal opinion. So do that. I just wanted to quickly reference that because that's ending at the end of February, so not much time left to do that. And it's free money, guys, so go ahead and do that. But anyway, what we wanted to talk about was this, what we said in the introduction, 25.2k. What is important about that level? Well, there's a few things that are important about 25.2k. The first of which is that 25.2k is the top of this range. Now, I'm talking about a macro range. The range Bitcoin has been in started out in June, okay? We dropped down in June, we dropped down below 25k for the first period of time, and you can see that this entire range here is one big macro range between 25.2k and around that 15.4k low. That is the big range Bitcoin is in. Now, that 25.2k level, of course, is the top of the range. And so recently in the last 24 hours, for the first time since August, for the first time in 6 months, Bitcoin has come up and tested the top of the range. Not only has it tested 25.2k, but it's rejected just on top of it, which validates that being the top of the range to begin with. Okay, so that's actually good for the charts. It shows us that that is a strong resistance zone, and that is in fact the top of the range. You know, I guess you could say, well, a rejection's bearish, Wolf. It's like, yeah, a rejection is bearish, but it's definitely expected. I mean, this is the first retest of the top of the range we've had. This isn't a retest over here in August, because that's establishing the top of the range. It's not a retest. The first retest, you're generally not going to see a breakout, you know, unless you're very, very, very much in strength. In territory of bullish strength, which we are, but at the same time, we're very exhausted. I think we can see that through the charts here. We've moved up significantly without any major correction. I mean, we saw a 10% correction, but that's only 10%, you know? So not only is 25.2k the top of a local range, or I guess you could say a macro range, it also is where the 200-week SMA, the 50-week EMA, the 50-week SMA, and the bottom of the Gaussian channel on the weekly chart sit. So you can see that not only are we getting rejected from the top of the range, we're also getting rejected by 1, 2, 3, 4 separate indicators on the weekly chart. So this is, and this is what I said in yesterday's video, this is at 25.2k very much the strongest resistance Bitcoin has faced in maybe a couple of years. Okay, it's very much, you know, a very strong resistance. All of those levels together in one spot between a 500 USD range, that's massive. That's massive, and that cannot be underestimated. So anyone who's thinking of taking longs right now, anyone who's longing Bitcoin in this region, think again. You can't long into a very strong resistance, a resistance of which we have not seen the magnitude in excess of 2 years. You can't do that. It's not a logical move to make. What you need to be looking out for, and again, this is repeating what I said yesterday, what you need to be looking out for is a weekly candle close above 25.2k. If we get a weekly candle close above 25.2k, we will break above everything I just listed here on the weekly chart, and a weekly candle is, you know, means a daily candle has happened. And so if we see a weekly candle close above 25.2, we will also see a daily candle above 25.2 and hence break out of the range. Now, if we do break out of the range, okay, that range being the top at 25.2k. If we do break out of the range, the good news is there's really not much stopping us from zooming upwards, okay? Because obviously, 4 major moving averages on the weekly chart in one location, once you break that, you're above them, okay? Now there's support. That's massive for macro, right? And what that means is that we can zoom upwards, and this is supported by the volume profile. Now on the right hand side of the screen, I have the volume profile. The volume profile is essentially something that measures all historical trading volume at specific price points. When you have a lot of trading volume at a specific price point and you are above that level, that means that level is a strong support, okay? And when you are below that level, it means it's a strong resistance. As you can see, between around the top of 25k, so look at the right hand side of the screen here. Between around 25k and around 28k, there's a massive distinguishable gap in the volume profile. There has not been much trading volume in that region, which means there has not been much time for resistance to build in that region, which means if we break 25k and we enter that gap on the volume profile, we will most likely zoom to the top of the gap at 28.6k. 28.6k, of course, is the major horizontal resistance level that distinguishes whether we're in bearish market territory and bullish market territory. We had similar levels in previous cycles. For example, in 2018, the level that is the equivalent of 28.6k is here at 5,600. As you can see, it held us up for the bull market. We dropped below it, acted as resistance. We finally got above it. We zoomed to the upside. So that is the same thing as 28.6k in this occurrence. So basically what I'm saying is this. Okay, what I'm saying is this. If we break 25.2k on a weekly candle, we will be at 28.6k in basically no time. And then that is another test, right? That is basically the level where we need to build up confidence again before we break that. That's the next major resistance level above 25.2k. Very important to note. So all eyes on the weekly candle. We've got 2 days and 18 hours. Do I personally think this weekly candle will close above 25.2k? I don't personally think so. I personally think we need to see a little bit more consolidation before that can happen. And one of the reasons for that is the fact that the DXY at this point in time, which we know is reverse correlated to Bitcoin. So when this thing goes up, Bitcoin goes down. This thing has seen a breakout after a lengthy descending channel formation that lasted since November. So that's a 3-month channel formation. It's just broken out. That's moving to the upside. That will most likely bring Bitcoin down. The S&P 500 as well is just breaking down from resistance from support right now. And the same thing with Ethereum. Now, you know, Ethereum hasn't broken down yet, but it is in a descending channel formation, which is not very good. So all the signs at this point in time don't necessarily indicate that Bitcoin has the strength to get over it this week. But hey, look, maybe next week, maybe the week after. The fact of the matter is this, we need to be watching those weekly candle closes, because when we do get above it at 25.2k, that is when we can start making some real progress to the upside, and that's when we can zoom up to 28.6k. And as you guys know, I believe the bottom's in now. I believe the bottom is in 16k. But for full charting confirmation of the bottom being in, we need to break 28.6k. And the reason is this, right? Because we have this range up here. That's the bull market range, and that's above 28.6k. And we have the range down here. That's the bear market range, and that's below 28.6k. Very important that we break 28.6k. And the first step to doing that is closing a weekly above 25.2. So all eyes on the charts, guys. Not really much to say other than that. We have seen a very sharp rejection. It's nothing to be too particularly scared of. We're just basically following charting patterns. And you know, this is kind of expected to a certain extent. I wasn't expecting a breakout at all yesterday. When we were up in that price region, I did say that it was looking uncomfortable. We have a triangle on the RSI that you might want to watch as well. We have a bullish MACD cross incoming on the daily MACD, but it could be averted quite easily, especially considering that we closed the daily candle back within this red resistance box, this rectangle here that I've identified, which stems backwards from 2020. So it's not looking particularly strong this week. I doubt we'll see that weekly close above 25.2k this week. As long as we are above 21.6k, which is this level here, right, we're in pretty decent territory overall, because if we break that, if we break below 21.6k, we will have formed a lower low. Regardless of where we bottom, we'll form a lower low, and that might establish some sort of trend reversal that brings us downwards for an extensive period of time, maybe a couple of months. So realistically, the overall argument is this: we need to stay above 21.6k, and we need to break above 25.2k whenever we can, provided that we stay above 21.6k. That's what we need to do. That's the objective. That's what you need to be watching. So guys, go ahead and check out the Wolves of Crypto VIP group. I've got the VIP information and results group right here. This is where you can find out our previous trading history, our previous trading signals in this document here, and see the results that occurred from those trading signals and that trading plans, etc. We've got 400 members in the information results group. We've got 100 VIP members. You can also check out the community discussion group over here. I just flashed the VIP group for anyone who wants to see some of the videos there. But you can also check out the Wolves of Crypto community discussion group, where we discuss the market kind of 24/7. Got 724 members. They discuss anything to do with the charts, anything to do with news events that are going on in the cryptocurrency space, and that's completely free to join if you're interested in a little community where you can throw your ideas around in the charts and get some feedback from other people. On top of this, we've got the Crypto Academy Become a Trader course developed by myself and Megawell Crypto. We made this course to teach people how to trade, to teach people how to analyze charts. We're very happy with how it's going so far. We've got 90 students, and we haven't really had any real complaints. So go ahead and check out that website there. You can read about the course in the bio. You can see what units there are, and you can chuck us an email at cryptoacademycourses@gmail.com for any questions or any information regarding how to make a payment. Okay, guys, thanks for watching the video. I hope you enjoyed, and I'll catch you tomorrow.